All right, let's talk about the U.S. housing market. Man, the headlines are all over the map, right? One day it's booming, the next it's busting. So what's really happening? We're going to dig into the latest data and try to make sense of it all.
Okay, so check this out. In October, the housing market was somehow both down and up at the same time. I know, it sounds impossible, right? It's a total head-scratcher, but this is the puzzle we're going to try to solve.
So yeah, that's the million-dollar question, isn't it? What is really going on? Is the market strong? Is it weak? Let's get into the numbers and see if we can figure this out.
First up, we've got to look at the big picture, right? The national numbers. And this is exactly where things start to get a little weird, because you've got these two key stats that are telling completely opposite stories.
So the specific numbers we're talking about are pending home sales. Now, that just means a contract's been signed, but the deal isn't officially closed yet. It's a really good sneak peek into where the market is headed. And we're going to look at it in two ways, year over year versus month over month. It really is all about the time frame you're looking at.
Okay, so first, let's look at the year-over-year picture. Pending sales were down just a tiny bit, negative 0.4% compared to last October. So from that long-term view, you'd say, okay, the market's cooled off a little, it's a bit slower than last year. Makes sense. But wait a second, look at this. When you compare October to just the month before September, sales were up almost 2%. That's a pretty nice little short-term jump. So even though it's cooler than a year ago, it actually picked up steam in October. And boom, there's your contradiction right there.
So the national numbers are basically a tug-of-war, pulling in opposite directions. So what gives? Well, maybe the answer isn't found by looking at the whole country at once. Let's zoom in and look at the regions, because as you're about to see, geography tells a way clearer story.
And yeah, this table really lays it all out. The National Association of Realtors pointed this out. In the West, where things are generally more expensive, the market really struggled. But you look at the Midwest, it was a totally different story. It was shining. And the key reason boils down to one word: affordability. The less expensive areas are where the action was.
Okay, so we've got the what and the where. Now it's time for the big one, the why. And to get to that, we're going to hear from a couple of top economists who've been digging into this exact same data. And, they've got some really interesting and slightly different takes on it all.
So in one corner, you've got Lawrence Yun. He's the chief economist for the National Association of Realtors, the biggest trade group for real estate pros in the country. And in the other corner, we have Dr. Lisa Sturtenvit, the chief economist for Bright MLS, which is a huge listing service. The key thing to remember here is that they are both looking at the exact same data.
Let's start with Dr. Sturtenvit. She's got a more cautious view. She's looking at things like economic uncertainty, those higher interest rates, and she's basically saying, hey, pump the brakes. She thinks home sales are probably going to be pretty slow for a while, maybe even through the end of 2025.
But then you've got Lawrence Yun. He's looking at something else entirely. He points to the job market and says, look at all these job gains. That's super reassuring. He sees that as a sign that the overall economy isn't about to slide into a recession. And a strong economy, well, that's a good foundation for a healthy housing market.
And Yoon actually sees a silver lining here for buyers. He points out that during the winter, things typically slow down anyway. Homes just tend to sit on the market for a bit longer. And what does that mean if you're out there looking for a house? It could mean you've got a little more room to negotiate, better bargaining power.
So, okay, they've got kind of different tones, right? One's cautious, one's a bit more optimistic, but what's really interesting is what they both agree on. First, they both think the housing market is fundamentally healthy, deep down. Second, they agree that affordability is, without a doubt, the single biggest hurdle. And third, they both see lower mortgage rates as the magic key that will bring buyers back into the game.
And that right there, that brings us to the bottom line. It's the one big idea that actually ties all these mixed signals together. This is what explains what's really going on. It all comes down to one thing, the affordability challenge. Think about it. You've got this really strong market with tons of people who want to buy a house, but then you have this 1-2 punch of high home prices and high mortgage rates that's knocking a whole bunch of them out of the ring. This one single issue explains everything we've seen. Why the Midwest is doing better than the West, why the national numbers are so contradictory, all of it.
And, this isn't something that's just going to fix itself overnight. Dr. Sturtevant was really clear about this. This whole affordability problem is going to be the story of the housing market for years to come. It's the main drama, the central conflict we'll all be watching.
So that leaves us with the big, lingering question, doesn't it?
As things keep changing, with mortgage rates, with the economy, is that dream of owning a home going to get easier or even harder? We know people want to buy, but the cost is a massive barrier. Which side is going to win out? That's the story we'll be keeping our eyes on.